Good evening, everyone. Time for another silver update. This is the daily chart of silver provided by netdania.com. You can click on the link below. Now you can see our two major long-term downtrend lines. The first one is pointing to about 2250 as the breakout price target, and you can see that the lower one, drawn from about a year ago, a little more than a year ago now, about 14 months ago, we're actually ticking up above that. We've also got a positive movement towards a cross of the MACD into positive territory. So we're still waiting for silver to make a move to the upside and show that this bottom is actually in place. The long consolidation period here seems to indicate that silver has put in a bottom. You can see where the line actually touches all the way back here in 2010 before the big run-up. So obviously it's my opinion that silver is extremely undervalued, and we're going to see a run at some point, but I can't say when that's going to be. Now, the news today is absolutely astonishing. This is the Zero Hedge article. The farce is complete. Blythe Masters joining the CFTC. Now, that's just something that makes you wonder whether you're reading an Onion article. It's astounding that such a thing could happen. But here it is. We thought today's news flow and market action ranked pretty high on the absurd surrealism scale, and then we saw this. Blythe Masters to join CFTC Global Market Committee. JP Morgan's Blythe Masters to join CFTC Advisory Committee. CFTC spokesman comments on Blythe Masters joining the committee. That's right, you read it correct. Blythe Masters, head of JP Morgan and Chase's Commodities Division, is joining an advisory committee of the U.S. Commodity Futures Trading Commission, said Steve Adamski, a spokesman for the regulator. Masters 44 was invited by acting chairman Mark Wetchin to sit on a global markets committee at the Washington-based regulator of futures and swaps. Unbelievable. Now, you know that Blythe Masters has been indicated as the mastermind behind JP Morgan's silver manipulation, and she's also been implicated. She's also known as the inventor of the credit default swap, but was also interested in an Enron type energy manipulation scheme. So let's take a look at an article, or a blog I should say. It's called Blythe Masters, a Banking Corporate Villain Close Up. This is from Kimball Corson, 2013. Blythe Masters, a banking corporate villain close-up. She is a senior old hand at JP Morgan Chase and a dishonest rat. A math economics whiz out of Cambridge. Masters, the head of JP Morgan's commodities business, is known as a pioneer in the use of credit derivatives, financial products that played a starring role in the 2008 financial crisis. Her success at JP Morgan stemmed from her vision of the 1990s that these products could transform the banking industry by allowing the financial system to earn much greater profits at the price of much greater systemic risk. She became a managing director at 28, then the youngest woman in the bank's history to reach that rank. Derivatives seemed creative and also appealed to Ms. Masters because of her quantitative background, she once said. By separating certain risks from an underlying asset, derivatives seem to offer a way for a bank to make more loans than it otherwise would be able to. She made a breakthrough when Exxon, a longtime client, asked for a credit line to offload the risk without actually selling the loan. Ms. Masters arranged a deal with the European Bank for Reconstruction and Development in London, in which the bank would get fees in exchange for assuming the risk of default, while JP Morgan would keep the interest earnings. The deal was known as a credit default swap. Soon the Masters and team at JP Morgan began talking to regulators about the new product. In 1996, the Federal Reserve essentially and stupidly gave its blessing with a statement suggesting that banks could use credit derivatives to reduce their capital reserves. This could be done by swapping out the default risk on loans outstanding so as to treat those loans as new reserves. As one banker put it, suddenly we had unlimited capital to lend. But the grand promise of derivatives came undone in the financial crisis of 2008. The contracts ended up making embattled institutions even more vulnerable to mounting losses. Warren Buffett called derivatives financial weapons of mass destruction, and that made Ms. Masters a destroyer of worlds, as a September 2008 article in The Guardian declared. But it seems Masters' picadillos don't end there. Now the claim is that she has lied under oath and criminally obstructed an investigation of J.P. Morgan. Here's how, with a bit of background first. In the energy market investigation, the enforcement staff at the Federal Energy Regulatory Commission intends to recommend that the agency pursue an action against J.P. Morgan over its energy trading in California and Michigan electric markets. Its 70-page report also took aim at a top bank executive, Blythe Masters. The regulatory document cites her supposed knowledge and approval of the schemes carried out by a group of energy traders in Houston. Sounds a lot like Enron, doesn't it? Remember, Enron was running a scam where they were selling energy to the state of California, running up the price, making huge profits. The agency's investigators claimed that Ms. Masters had falsely denied under oath her awareness of the problems and said she and others at J.P. Morgan had made scores of false and misleading statements and material omissions to authorities. J.P. Morgan, of course, claims that it and Masters are as innocent as a driven snow and is preparing a further response. Yet under pressure to generate large profits, the agency's investigators said traders in Houston devised a workaround, adopting 8 different schemes between September 2010 and June 2011. The traders offered the energy at prices calculated to falsely appear attractive to state energy authorities. The effort prompted authorities in California and Michigan to dole out about $83 million in excessive payments to J.P. Morgan, the investigators said. The behavior had harmful effects on the markets, according to the document. For now, according to the report, the enforcement officials plan to recommend that the Commission hold the traders and Ms. Masters individually liable. While Ms. Masters was less involved in the day-to-day decisions, investigators nonetheless noted that she received PowerPoint presentations and emails outlining the energy trading strategies. The bank and Masters investigators said then planned and executed a systemic cover-up of documents that exposed the strategy, including bogus profit and loss statements. In the March report, the government investigators also complained about what they said was obstruction of justice by Ms. Masters. After the state authorities began to object to the strategy, Ms. Masters personally participated in J.P. Morgan's efforts to block state authorities from understanding the reasons behind J.P. Morgan's bidding schemes, the document said. The investigators also referred to an April 2011 email in which Ms. Masters ordered a rewrite of an internal document that raised questions about whether the bank had run afoul of the law. The new wording stating that J.P. Morgan does not believe that it violated FERC's policies. This gal is a money-grubbing bee on wheels. She even looks toxic. So there's one guy's summary of Blythe Masters. Think about this, folks, that we have a person who was doing an energy trading scheme similar to Enron. We have a person who invented and pushed credit default swaps, which nearly blew up the world in 2008. And we also have a person allegedly is involved in the manipulation of the silver market suppression. And we find out today that she is going to be working for the CFTC. So, shocking to many, not shocking to me. I remember, we're going to look at Ted Butler here in a second. I remember Ted Butler always talking about how the CFTC was going to come to the rescue. And Bart Chilton was the hero. Well, Bart's gone and Blythe is in. So, That apparently isn't working out so well. But speaking of Ted Butler, I wanted to go over this Gold Silver Worlds article. People have asked me to comment on this. Basically, to summarize, this article is saying that JP Morgan has been accumulating physical silver whilst shorting paper silver, positioning themselves for a move to the upside. So we'll read a little bit of this. While everyone is focused on the massive outflows in COMEX registered gold inventories and the gold ETF GLD, it seems that an important evolution in silver is passing unnoticed. In what follows, Ted Butler, precious metals analyst specialized in COT analysis, reveals a remarkable insight in the physical silver market. Butler's calculations show that JP Morgan has piled up the largest holding of physical silver in the modern world. Since the silver price peak in May 2011, the bank has accumulated between 100 and 200 million ounces of physical silver, if not more. The equivalent in metric tons is between 3,000 and 6,000 tons. To put that number in perspective, it surpasses the amounts held by the Hunt brothers or Warren Buffett and his investment company Berkshire Hathaway. On a yearly basis, some 100 million ounces of silver reach the investment market, which translates into 250 million ounces between May 2011 and December 2013. That has a value of approximately $5 billion. Given the size of the too-big-to-fail bank, that amount of silver, how large it may seem, is easily affordable. And he goes into JP Morgan's profits. Now, do I believe this? I don't know. I don't know how much they have. I do know that there isn't a lot left over after of the mining supplies when we're talking about how much industry uses. The figure here is 250 million. We know that, we'll just say roughly 750 million ounces of silver is mined every year. We know that industry takes around 500 million of that, leaving about 250 million ounces. So the numbers seem correct. Now, is this a big deal? I really don't think so. After all, we're only talking about $5 billion. Now, an interesting speculation, if it's the case that with JP Morgan's gigantic derivative book, which Blythe Masters, of course, had a hand in, being anywhere from 50 to $100 trillion, be very interesting if JP Morgan is planning on trying to offset that huge derivative risk with 200 million ounces of physical silver. Either way, actually, whether they're lying about it or whether they actually have it, I think it's bullish for the price of silver. If they don't have it, and I suspect that a lot of people who claim they have it, including the SLV, which, by the way, JP Morgan is also involved with, if they don't have it, of course, that's very, very bullish for silver. If they do have it, then it's probably an indication that at some point they're planning to flip and go long